Hi, everyone. This is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. It's good to be back. Thanks for those of you that had sent in comments. Last couple of weeks were not a whole lot of fun. I got the Chuck Norris look going on tonight. I feel like some strength and perseverance to get through the past couple of weeks. Thought I'd go ahead and rock the hat tonight. Welcome to those of you that are viewing on one of the live streaming services. And for those of you that are our subscribers and longtime viewers, welcome to everybody. It's good to be back. And if you by chance are watching this for the first time, we have to show you this. It's our disclosure/disclaimer. It is important, so I don't want to make light of it. A couple things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. The rest of it's important as well. So again, if you're seeing this for the first time, please take a screenshot of it, read it in detail at your leisure. Here's how TradeFinder works. We take a look at the markets, and we used to just look at the US market, but we've branched that out. We look at a number of different markets. And when we start to look at a few of the international markets, please don't tune out if you're only interested in trading in the US, because all of the symbols that we show are securities that are tradable on the US market. So ETFs, et cetera, things that may represent other markets can still be traded on the US markets if they have great patterns, and we look to trade them, like the DAX, et cetera. Then we'll review any case study alerts that we have closed for our alert subscribers at Elliott Wave Options, EWOTrader.com. That way you get an idea of what the alert service looks like. How is that different than TradeFinder? Well, TradeFinder, we come up with case study considerations, and then you're kind of on your own as to whether you manage them or what you do from there. But with our alert subscribers, we guide our subscribers from beginning to end, entries, any adjustments, and exits throughout the entire trade process. So then we'll review any case study considerations that might deem to be still open. And then we'll look to see if we can find one for consideration for tonight. And with whatever time's left, we'll open it up to a Q&A. That usually amounts to you guys giving us some of your favorite stock symbols, and we take a look at what our indicators may have to say about those. That's it. That's how TradeFinder works. So let's go ahead and get into it. Again, welcome to everybody viewing on the various social media platforms. We take a look at the market in the last SPY update that I did over the weekend. Hopefully you've had a chance to watch it. If not, if you're viewing this live on YouTube, you can go to our YouTube channel, Elliott Wave Options, and look at the last recording. The theme of the recording was Zig Zags. There's a number of markets, and you're going to see that as we go through and look at the markets now, that are in zigzag patterns. They're qualified patterns. They're not confirmed yet. But what's the difference? Let me explain to you what the difference is. So when we take a look at this pattern here, and we look at the SPY, you can see that's the A wave. There's the B corrective move. And the fact that the B corrective move is at 61.8 makes it a very strong qualified pattern. Strong because to me, the 61.8% fib level is the strongest of all fib levels. When does it become confirmed? Well, it doesn't become confirmed until that A level is broken, but it's qualified now. So you can see if you wait until it becomes confirmed, you don't have as much room to trade. Will we get down there? We'll see. Just because the pattern is qualified, there's no guarantees. There's no guarantees even once it becomes confirmed that the 100% extension is going to be hit. But I will tell you this, that when you have a B wave correction that goes 61.8, that's my favorite of all patterns. So have to take a look at that and respect the opportunity for a potential movement to the downside. Whether or not it materializes, we'll wait and see, but it's got my attention as far as possibility. Now, something else that's starting to look, if we take this zigzag pattern off, you can see that you could make a pretty good case here that there's a bit of a triangle that's forming here as well. Pretty good set of lower highs, not too bad on the higher lows either. So we have basically two pretty qualified Elliott Wave patterns that are occurring right now. Qualified zigzag to the downside, and then when you look at a triangle, triangles supersede anything else. because a triangle can break in either direction. So we look at that from a directional standpoint. You got a qualified downward zigzag. You might want to lean towards, hey, we're probably going to break to the downside out of this triangle. I would encourage you not to do that. I would encourage you, because based on my years of experience, when you have a really well set up triangle, it can go either direction. Elliott would even say there's times when he leans one way or the other on a triangle breakout. But my experience has been, it's a flip of a coin as far as whether it breaks to the upside or the downside, regardless of what other directional patterns may be in play. So as much as I enjoy or really like the formation of a downward zigzag with a 61.8% B wave correction, when I see a triangle formation like that, that supersedes anything else for me, and realize that anything can happen. And what's really interesting about this pattern is the fact that, look at the size of this mouth of the triangle, from 480 down to 420. That's 60 points wide. We're usually looking for a 10% breakout. And usually when you're talking about the markets or the ETFs, you really don't get triangles that have a mouth that's 10% wide on the potential breakout, just because the ETFs soften the potential moves, right? I mean, they level it out. That's the whole idea of an ETF, is to mitigate risk. Well, to have one this size is pretty impressive. And so that means that starting at 450, which is the point of the triangle, which makes a lot of sense to me, because we've talked about this in the last few SPY updates on YouTube. 450 is a support resistance level, just as 430 has been. And look at where the markets have been. 430 held on the low, and now we're consolidating at 450. All of this makes perfect sense. The markets don't always make sense, but they are making sense right now. And so the break from here, we break below 430 on a downward breakout, then watch out below. I think we go to 400 and fill that gap. If we break to the upside, then the question becomes, can we break above 480 and set new all-time highs? So I think it's probably going to take a few days. Maybe we don't even get the answer this week. Maybe it's next week before we know which way we're going to break from this triangle. Maybe it happens tomorrow. Who knows? But it's not a poorly formed triangle. It's not bad. And with that size of that mouth of the triangle, we could be having some pretty good volatility here for a while. So we'll see how that plays out. But I thought I would share both of those scenarios with you. Not often that you have two such really qualified corrective patterns, and corrective patterns within Elliott Wave, remember, are flat zigzags and triangles. So we've got both a zigzag and a triangle that are very well qualified at this point in time. We'll see. And if it comes out that, oh, it breaks to the downside, oh, well, you know, the zigzag was showing the downside breakout, I'm still going to say that you got to respect the fact that there's the potential to break to the upside as well. And I know all the fundamental stuff out there, the Federal Reserve is raising rates or withdrawing liquidity, all that stuff's negative. And you would think that the breakout is likely going to be to the downside. But I'm just telling you, when you see a triangle like that, respect both directions. That's the best advice that I can give you. All right, so let's look at some of the other markets. And as I said, there's other zigzags that are in play as well. So we take a look at the diamonds, and you can see that the diamond is trying to break a little bit higher than what we had on the SPY. But when you look, there we have still that zigzag pattern. In this case, it's a 50% correction. Well, no, I hit that one wrong. So let me redo that. Cut this out and miss the bottom part there. There we go. Now we have that 61.8% level, and there's the 100% extension down around 320. Now we're getting close to breaking to the upside. A question was asked on YouTube on the last recording that I did: what would constitute disqualifying this downward zigzag? Well, that would be a break to the 78.6% level. Elliott would look at 70% and say, yeah, you know, I don't think that the pattern is still intact. But as far as following the rules to the T, it's 78.6. So if this move to the upside here, would break above that B level and get up to 78.6, then you would disqualify the downward zigzag. That would also constitute an upward breakout. This triangle is not quite as well formed as the one on the SPY, but it's not bad either. So you take a look at this and you can see that we're kind of in an area here where the market's like, I have no idea what's getting ready to happen from here. Is it the unknown of the Russia-Ukraine scenario? Possibly. We'll wait and see how that plays out as well. Interesting tidbit that I thought I would share with you. I've done a lot of reading on that just out of curiosity. And February 15th tends to be when, for some reason, you get the, you heard about the frozen tundra. If you're a football fan, we talk about Lambeau Field with the Green Bay Packers, the frozen tundra. Well, around February 15th is when the ground is its absolute coldest in Russia. And so for some reason, that seems to be, from the military pundits out there, a time when if Russia's going to do anything, they're going to do something around that date. And the further we go past February 15th, the less chance there is of a Russian invasion of the Ukraine. So I thought that's just something I'd throw out there for you. We're at February 8th now, so a week from now would be the peak time. If Russia's going to do anything, every day that goes past February 15th, it's less likely that they're going to do anything. So for whatever that is worth, it's just a tidbit I thought I would share with you. And then taking a look at the Qs, we look at those and you can see that a pretty decent little triangle forming here. And you have to look at that and say, well, man, do you take that all the way back up there? It's a pretty good set of lower highs, so I think you do. And then the higher lows here, it's not quite as symmetrical as the other two triangles, because you can see the move down is a much longer trend line than the move up. So the lower highs is a much longer trend line than the higher lows, but you still respect that. And then we talked about this also in the update. There's a nice zigzag pattern in the A wave there. So that's a complex A wave here on the Qs. And then you have this corrective move here right at 50%, which could bring all the way down to 300 on the Qs if we do get a downside breakout. Now, obviously, if there is an invasion of Ukraine by Russia, that's going to be a pretty negative for the markets, at least for the short term. So some of these downward moves, if that's the way we break out of these triangles, we could have a downward move in a relatively short period of time and then a bit of a snapback. Triangles get retraced. So when you break out of a triangle, that move gets retraced. Whether or not it's right away or takes some time, that's the unknown. We don't really know for sure. But, it's interesting how what's just occurred over the past couple of trading days, from looking at these qualified zigzag patterns to, wow, they're forming some pretty nice triangles as well, is super interesting to me. Now let's take a look at the IWM. And we're going to go through this in depth in the next Elliott Wave SPY update on the website. But you can see, look at the difference in the triangle here. So rather than this kind of a nice symmetrical triangle, we have a pretty small ascending triangle here on the IWM. And we're down here at 190. And the whole key has been 210. You've heard me talk about that. If you've been watching these TradeFinders or the SPY updates, you know the 210 was the support level for the IWM. It broke it. Now we're hanging around here. We're just in no man's land, forming this corrective triangle. So we break out of this triangle. An upside breakout from here means nothing to me. It's got to get back above 210. So if we can break out of here and get back above 210, well, then we can start to look at, man, are we just right back where we were last year and we're going to run up to 230? That will be the next resistance level if we can break above 210. But we got to get there first. And if we don't, if we break to the downside and we break below 170, or excuse me, 190, I'm already thinking ahead, the next level is 170. So that would be the point that you'd be looking for if we get a downside breakout of this triangle and it's able to break below 190. But we have to break below 190 or none of that matters. So the key is, out of this little ascending triangle here, do we break back above 210 or do we break below 190? So kind of interesting there on the IWM as far as which way we go. Bitcoin is able to get back not just above 40,000, but look where we are now, back above 44,000. And we've been talking about this for so long that these levels here, right there, that we had to hold right there at the 36,000 level, that needed to hold. And we, I joked about, we tipped our, or dipped our toes in the water there to 32,000 one time, that if we didn't hold in, then it was going to really get ugly. Well, we just kind of said, okay, let's take a look at it, and then right back above 36,000. And then the key was, could we get above 40,000? And if we get above 40,000, what happens from there? And so there's 40,000 right there. We got above that, and now we're all the way back above 44,000. So pretty strong move out of Bitcoin. You definitely have to respect those moves. And the key will be, can we consolidate? Because we're a little bit overbought now with this move. We still don't have a bullish 1030 cross to where we can start looking at even higher levels, but we're at a point now where we've got at least a 38% V-wave correction. That's the negative, is the fact that we're still in a 5-wave impulse pattern to the downside, and this bounce to the upside was normal because you got to create a wave 4, and now we're right at 38%. So we're right at the 38.2% level, and you can see we have some resistance ahead here. If we try to go higher, 48,000, it's got a lot of resistance. Now, if we get above that, we may have something going. Perhaps we could disqualify this downward downward impulse pattern, but not yet. But right now, we're just at a level, that's a good fib level at 38.2. Is that going to be the end of it? Are we going to stop there? Are we going to start to head back down and create this wave 5? So don't get too excited to the long side yet. It's impressive what's happened, but it's also expected because a bounce up and creating the wave 4, whether or not it continues higher or not, what's occurred so far is just classic Elliott Wave price action. So creating this wave 4, we're right at the 50%, or excuse me, the 50-day moving average. All this stuff is just, it's just classic. So there's nothing super exciting here to the upside yet. Now, breaking above 48,000, disqualifying this downward 5-wave impulse pattern, that would be different. But we've got a ways to go before that occurs now. So watching this bounce, it's impressive, it's expected, and it doesn't really mean anything at this point yet. So looking at the XJO, one of our subscribers said, well, what do you look at for the ASX? What do we trade for the ASX? Well, the XJO. That's what we look at. Look at that snapback. So that's pretty impressive. We had this big triangle pattern here, about as nicely formed triangles you could expect to see. Really well formed symmetrical triangle right through the middle here of this area was the support resistance. And so then we got a significant breakout of the triangle, and now we're retracing that. We got oversold, tremendously oversold. Now the 10-day is too far away from the 50-day, so we're still oversold, even though the 10-day is correcting back to the upside. So those are two things. No security in any time frame gets very far away from the 10-day moving average. And if the 10-day moving average separates from the 50-day too much, that gives you overbought, oversold conditions as well. So it's not just the 1030 crosses that you look for. You look for where's the 10-day in relationship to the 50-day. And you can see right here, this lime green line being the 10-day, and then that being the 50-day, that was too far, too much separation there. And so bouncing back to the upside was what was expected. That's what's occurred. So now I would see that there's probably a high likelihood that we're going to continue this upward move in the XJO and retrace the breakout. That's what usually happens. You get a significant breakout and then you retrace it. But look at that volatility in the XJO. That's amazing. Straight down and turning around and coming straight back up. So I would expect to see at least some sort of a test of this breakout before then we figure out, all right, what happens from there. We'll wait and see. Notice that we had a wave 3 to the downside, the wave 4 bouncing up, no labeling of a wave 4 yet. So the algorithm is saying that there could be more to this than just a wave 4 correction. And then that could relabel this entire impulse pattern. Just because we look at a lot of the different markets, we'll look at the Nifty and look at this triangle. We hadn't talked about a triangle in the Nifty. Yeah, we've been talking about, you know, these levels here at 49 and 47 and 51 being resistance. Well, we got a nice little triangle here on the Nifty too. And so you can just see that a lot of markets following indecision in the US markets. Where do we go from here? What does all this inflation stuff mean? What does all this Federal Reserve stuff mean? It seems like the market's like, we don't know. And we'll find out all together by which way these markets break out. And then the DAX, it's funny, I've been talking about the DAX a lot on the SPY updates. And then somebody, I didn't do it on the last one. And somebody said, well, what about the DAX? Can you show me the DAX? Well, look what we have here. We have a triangle here. And the DAX has been just the poster child for Elliott Wave. This wave 3 was a wave 5, came down and hit that target, relabeled a wave 3. Then we got the wave 4 bounce, a perfect 50% correction. Then we came down and made the new wave 5 target. And now we're going through a corrective triangle. That is as classic of Elliott Wave action as it doesn't get any more classic Elliott Wave than that. You have a wave 5 that hits its target. Does it look like it can go lower? Okay, relabels to a 3. We bounce back. We get a 50% correction in the wave 4. Then we go down and make a new wave 5 low. What happens at the end of a wave 5? You go through one of the corrective patterns. In this case, you're going through a triangle. It's just textbook Elliott Wave stuff. And if you're a doubter of Elliott Wave, you need to follow the DAX because it's been so spot on. And this has been going on for an entire year. It's been so classic of the patterns that have occurred. So there you go. There's the DAX, along with all the rest of the market showing triangles. So we have triangles everywhere. So Zig-Zag was the theme over the weekend. Now we're morphing into triangles. Which way are we going to go? Are we going to break out the directions of the Zig-Zags, or are we going to buck the trend and go the other way? And I'm telling you, respect the fact that the possibility is they could break the other way. Maybe they don't. Maybe they break to the downside, and all the directional people can say, yeah, it showed you downside. I'm just telling you, you got to respect both sides and don't get caught picking a direction here with these triangles. So pretty interesting stuff there, I think. All right, so let's go ahead and move into some of our case study considerations. I'm going to use one of our case studies as our example of what we did at Elliott Wave Options for our alert subscribers, because one of them was picked as an alert for our subscribers as well. But we'll start off by looking at CMC. This is going back to, this was January 4th, and I've been looking for an entry for our alert subscribers for this since then. And now look what's happening. The old triangle theme going on again here. The ADX is not quite low enough yet, but looking at that, man, this is a triangle that I would really like to put a triangle on, because that is just really well formed. I just want to see that ADX come a little bit lower. I don't want to jump the gun here. I don't want to come in before it gets below 15. I would love to see the ADX go to 13, but as well formed as that triangle is, I don't know that we're going to get that opportunity. I don't think that the ADX will make it to 13 before the breakout occurs. I just want to see it at 15. So I might be being a little picky here on looking for a triangle and maybe another sideways day or two. Perhaps we miss the move. But that's what I'm looking at, and that's what I want to see, and watching this super closely to see if we can get that. And if we get an upward breakout, then we're right back to where we looked in the beginning of setting this up. Now, the next one is the XLF, and that's one we did send out to our alert subscribers. So here's where we were, and this is a good example of what happens when you look at the difference between case study considerations with TradeFinder versus being an alert subscriber at EWOtrader.com. So there was the setup, and then watch what happened from here. Boom. Well, that's not the direction we wanted it to go. this was a bullish case study consideration that we looked at. Well, we did send this out as an alert for our subscribers. So what do? Well, we adjusted it. So we sent this out as an original entry on the 11th. So same day that we looked at it for our TradeFinder group. That was the original trade that was sent out. There you go. There's the position. Here's the chart set up, exactly what we just looked at. And then we had the same issue that occurred. So it moved to the downside. So there's our chart on the downside. So what do? We added more calls. See, the expectation here was with interest rates going up, the financials were eventually going to move back to the upside. They went to the downside with the market moving lower on the more hawkish Federal Reserve comments that brought the entire market down. Even the XLF came down with it. But we're moving into an environment where it's really bullish for financials with rates going up and the spreads widening. That's time for them to make money. So what we did was we sent out an adjustment where we added more calls to the original position. So the original position was 5 of the April 43 strikes, and then the adjustment was 3 of the April 39 strikes. So we improved the delta a bit. And then we got the bounce that we were talking about out of the XLF. So we bounced back to the upside. Now that gave us the opportunity, along with the adjustment, to close out, pardon me, both of our call positions, the 43 strikes and the 39 strikes. And we turned what was, and you can see in our mark to market graph right here, the position at one time was down 76%. That's a pretty big loss. And in the end, we made 26% by just making that adjustment, understanding the market, understanding the dynamics of the market, understanding what happens when interest rates tend to go to the upside and how that's bullish for financials. So it was an opportunity with the XLF going down with the market to improve the delta of the overall position, and then turn that into a better than 25% gain. So we moved from a 76% loss to better than a 25% gain. And if you hadn't had that adjustment, if you didn't make the adjustment, you're still in a pretty significant losing position, even with the move back to the upside because of where the delta was on the initial position. So this is a perfect example of how we guide our subscribers at EWOtrader.com on entries, adjustments, and exits, not just, hey, here's a case study for you, and you take it from there. And then there was a commentary here detailing the things that I just talked about, and we post those, we post commentaries for our subscribers. And if it has to do with a specific alert, then it gets posted to the alert. And you can see that if I feel like there's more detail that needs to be talked about, then that's added in there as well. So really good example of what we do for our subscribers at EWOtrader.com. All right, so let's go ahead and get back to the markets and see if we can find a case study consideration for tonight, and then I'll go ahead and open it up to questions for whatever time we may have left. So we take a look at this scanners and open pre-computed scans. For those of you that are just seeing the software for the first time, those of you joining us on one of the live social media outlets, this is Profit Source. You can find out more about it at hubb.com, hub.com. To me, it's the best Elliott Wave software program that exists. I've tried all the ones that I believe to be in existence. A lot of them are people taking their own personal adaptations of Elliott Wave. But the thing about Profit Source that I really like is it's programmed exactly from the mathematical algorithm that Ralph Nelson Elliott himself wrote. So to me, if you're going to follow a system, you want to follow the system from the originator, the mathematical genius, not necessarily somebody's adaptation of it, their own personal viewpoint of it. That's just my opinion, but I've found this to be the most accurate as well. In addition to that, there's these pre-computed lists where you can just click a button and it runs a whole bunch of searches for you. You can see this Elliott Wave Options. Because I use this program, a lot of our subscribers at Elliott Wave Options do it as well. So the folks at Hub created these pre-computed lists for our subscribers that have Elliott Wave Options alert service as well as profit source. So in looking tonight to see if we can find some impulse patterns, this is pretty interesting to me, because if we click on the impulse list, there's 9 of them. 9 bullish impulse results. Now, if we go back and take a look at the market, so there's the diamond. So let's look at the SPY again. And if you look at that, that doesn't look so bullish, does it? I mean, we have the triangle, we have a qualified downward zigzag, and yet there's 9 impulse upward bullish stocks. Well, at first, it seems like, what? That doesn't make any sense. But it starts to make sense when you look at the results, doesn't it? Seacoast Banking, Fifth Third Bank, Associated Bancorp, Synovus Financial, Columbia Banking, Stifel, I think is how they pronounce it. First Foundation, Citizen Financial, and Cathay General Bancorp. They're all financials. Now, we just showed you how we had the upward move in the XLF, and we just utilized that upward move with the adjustment we made to turn a losing position into a profitable one. And so we ended up with a better than a 25% gain on a trade that was originally at a 76% loss, or at one point in time. So it makes sense. The financials are moving higher. That's the one sector that's moving higher. That played into the adjustment process of understanding the market and understanding what happens when interest rates go up, what sectors do better. Financials, because the spreads widen and they borrow on the short end, they lend on the long end, and the difference in the spreads how they make money. So we've got a whole bunch of those. So do we want to look at that? Should we go back and look at the XLF again? You could maybe say, maybe you got out of your position too soon. Let's take a look at it one more time and see what our signals show us on just the XLF, or maybe we need to look at the individual ones. Well, we're not in an Elliott Wave pattern. We're in a corrective pattern. We don't have a qualified zigzag yet. The ADX is below 20. Now we are starting to get separation between the two directional indicators. Maybe if they separate further and that ADX turns, that could be better. But that was the reason that we got out. That was in the commentary, is we're moving to the upside, but we don't have confirmation out of the DMI yet. So when you have an adjusted call option that moves fully in the money, so it goes from out of the money to in the money, and you don't have confirmation from the DMI yet, which is one of our favorite confirming indicators, that's when you go ahead and take the gain. Now, maybe it resets up, and maybe we get to the point where the XLF comes up and tests these highs. And if it tests those highs and then we get a confirmation from the DMI, well, then we can look to put on a new bullish position. But for me personally, now's not the time, so I wouldn't do it right now. We can keep an eye on it and see how it plays out from here, but I wouldn't do it now. So let's go back and look at some of these individual. Let's look at SF, because they're big. Oh man, we might have missed that. Look at what happened today, and there's significant volume behind it. Well, maybe not. Last DMI is looking pretty good, so we may have our case study consideration already. Look at the separation between the two directional indicators. Look at the ADX moving up. It came from below 20, it's above 20 now. It's moving nicely to the upside. You saw the volume on today's move. Significant volume behind that. I don't know for sure, but I'm guessing that maybe that was an earnings report today that came out. Now we're a tiny bit overbought on such a strong move to the upside. So moved up 5% today. I think that there's a great chance we go up and hit that 85, 86 target from 81. So that looks really good. It's gonna be tough to beat that one. The only suggestion that I would say is maybe we need to let this come back down to the downside. I realize that I left out a couple of our case study reviews. I'll catch those at the end before we move into questions. So if you're wondering, well, what happened to CDVA and TRV? I got all caught up in the XLF and moved on, but I'll come back and catch those. But I really like that one. That one's going to be a tough one to beat for me. So 2.8, the only thing that I can look at is perhaps we see if there's any sort of a pullback in the morning. from the fact that we're slightly overbought. Closing near the high of the day is a positive. I'd imagine the CMF looks really good, and the CCI up in the upper threshold, that all looks good. That looks really strong, and they're a solid company if you like fundamentals. Fifth Third also is. So let's take a look at them too and see they're powering to the upside as well. And that's not looking too bad here either. So we look at now the difference here is the ADX never made it below 20. That's a real picky thing. I get it. That's super picky. I just like it when the ADX comes below 20 and breaks back to the upside, because it's the essence of the rule with the DMI. So I kind of like that better. But we do have a wave 4 right at 50% and came down and tested this massive area of support. Wow. Just a huge area of support right there, 44, which happened to be a 50% correction, and we're moving to the upside. And yeah, that looks awfully good too. So I think we can pick either one of them. Maybe we just do them both. So let's just go ahead and put down SF and FITB. And those are both bullish positions. And you can look at the market and say, well, what if the market breaks to the downside? Could we go down again? Yeah, we could. That's a risk. If we get, pardon me, a downside breakout of these triangles, we could move to the downside. But when you see these kind of patterns that are as strong, and I would, if you only wanted to do one or follow along with one, SF would be my preference, just because of the better looking DMI. When you look at the rest of the confirming indicators, they all look really good. I just don't think you can go wrong with either one of those to the upside. Now, can the market break higher from here? We'll see. We'll find out. I still say that Russia is the wild card here, and we've got maybe a week before we find out whether or not they're really going to go through with the invasion or not. We'll have to wait and see. But the next week, fasten your seatbelts. I don't know that the VIX went down to 21 today. That's pretty low. Does it go much lower than that? That would be hard for me to imagine that there's not a risk premium built in for the potential of the Russia-Ukraine situation, unless people argue that that's already baked into the market. Maybe the market's already got that decided and cooked in. So we'll see. All right, so let's go back over here. We did send this one out as an alert to our subscribers as well, which was CTVA, and that was a strangle. You can see that we had the ascending triangle pattern. And from here, this one's breaking to the upside, and the call options are moving in the money now. So any further move to the upside, and we start to generate a really nice gain here out of this one, but we're not quite there yet. So for our alert subscribers, we're still holding that position. And then travelers, when we looked at this one, the key was, and I wrote down the notes, because we had this doji here on the day, it had to stay above 165. So we noted the doji and said the next day we got to stay above 165. And if we do, then you're bullish. And you can see that we never closed below 165. We came down and tested it, and that was because that was a support resistance area, but it stayed above it. And now look where we are. Now we're all up at 172. So pretty close to the point where you'd want to take this off. We looked for 10% moves. So from 165 up to 172 is 7 points. So we're not quite there yet, but you got a nice gain in this position if you decided to follow along with this one. So I'm going to cross off the XLF because we ended that for our subscribers. So we closed that and took the gain there with our adjustment. So that one's done. But the other ones would still deem to be open with the idea with the CMC. If we can get one or two more sideways days, perhaps we start to look at that one being a strangle position. And again, I understand that I might be pushing that. Perhaps I'm getting a little too greedy there, but that's it. That's where I'm going to be. Vince saying, welcome back, Mr. Cotter. Yeah, I do remember Welcome Back, Cotter. I do remember that series. And Vinny what was his name? John Travolta's character, Benny. You should know, Vince. It's your name. But is gold showing a triangle? GLD. Welcome back, Cotter. That was a show. So taking a look at gold, and yeah, this was talked about in the SPY update. Somebody made a comment about this. This huge triangle here. This is another one we're watching, and look where the ADX is here. It's below 13. So kind of getting really picky on this one, but not sending this out as a triangle yet either. But man, we're just a really nice set of lower highs and higher lows. That looks great. So that scenario is setting up really well for a triangle on GLD too. So yeah, I'm totally with you on that one. Mike, you're gonna have to. We try to keep it to 2 because there's so many people. So I'm going to do the first 2 that you brought up. So HII, and take a look here. 60% wave 4. So could we be heading lower from here? We certainly could be. Yeah. If you're looking for a downside position, then this is one that you might want to take a look at. Wave 5 impulse pattern to the downside with a perfect 61.8% wave 4 correction. If you wanted to be a touch more conservative, you would wait. Let's break 180. If we break 180, then you're in. And then you're going lower and probably significantly lower from here. But again, if you want to be a little more conservative, let it get below 180 first. There's the potential of 180 holding here because it's a pretty good support area, but I don't see anything that's showing it yet. The 10-day moving average, we hit it on the high. If that turned and broke back to the upside and we broke the 30-day moving average with the 10-day, then you could see that maybe we're going to go up and test that wave 4 at 200, but we're not there yet. So I would say this one tends to be looking more like a downward than upward, and perhaps that's what you are looking for. SJM, JM Smuckers, wave 4 right at the 38. Both of these have perfect fib levels. 38.2% wave 4 correction. I would say this is a good place to be. I think we talked about this a few weeks ago. When you're starting to move into a different kind of environment, no more easy money from the Federal Reserve. In fact, they're going to start pulling money out. You start to look at these consumer stocks that people are going to buy and take advantage of regardless. And that's what happens here with Smuckers. So right at this 38% level, can we hold here and break back to the upside? It's trying to hold the 50-day moving average. It's going to try and hold this fib level. If you want to be a bit more conservative here, I would say, you got that 10 about to cross below the 30. So you want to see if that can turn around. So I would say go ahead and wait for a bounce off this fib level before you enter. But right now it looks like just a really good wave 4 set up here on the correction, and we'd be turning to go to the wave 5. Get a more conservative approach, let it bounce first and see what happens from there. Randall talking about February 16th as the next full moon. Could be a night invasion. Well, that's right in that what I was reading about the coldness of the ground, the frozen ground. Interesting, isn't that? Until summer for an invasion, I don't know, it's all speculation, right? But from what I heard, if they don't do it too far after February 15th, it's unlikely they will. Take that for what it's worth. That's what I read. USO is certainly been impacted by all this. And we talked about this in the SPY update, that perhaps we were due for a little bit of a respite here because we had a gap up. So this is where we were, if I walk it back, that's where we were at the update, and we had gapped to the upside, and we were overbought at that point in time. And so now oil's back down to the 10-day moving average. So oil's broken above 90. I think it hit $92 a barrel. Most people think it's going to 100. I've seen forecasts as high as 120. 90 was my number. And so it's kind of hit where I thought we were going. And, you could certainly make a case, well, if you're going to go to 90, you're going to go to 100 likely. And one of the things that I shared in the SPY update is every single time historically that oil has gone to $100 a barrel, we've gone into a recession. So that's a fact. That's not just speculating on what Russia's going to do and the temperature of the ground. That's just all that speculation. But facts are, every time oil's hit $100 a barrel, we've had a recession. We're not too far away from that. Got a little bit of a move back to the downside, but awfully close. So could oil continue to move higher? I think that's likely. And I do think that until we know for sure that Russia is not going to invade the Ukraine, there's going to be a risk premium built into oil. So I don't see a significant pullback in oil. I think we got what we're going to get today. And it's likely that we're going to go up and hit that wave 5 target. That's what I think. Thank you, Liz. I'm glad to be feeling better. I know I've coughed a time or two here. It's just because my throat's not used to doing all this. It's the first time that we've really had a long one going on, but I feel so much better. I don't know if I look better yet because I know that the effects are lingering, but I certainly feel so much better. I appreciate that. Thank you. What sector do I think is the weakest right now? I think that was an easy one. Technology. Technology is just struggling because when interest rates go up, the technology sector has a hard time. So unless something changes, let's look at the TNX. That's one thing that we didn't look at when I was looking at all the markets. Unless we see some sort of a pullback in interest rates, and we're awfully close to that 2%. I don't think the market's going to like that. I've been on record as saying that numerous times. We're getting awfully close. We're powering higher. I really just think that it's just one of those it doesn't mean anything other than being a psychological number, 1.95 or 2%. What's the difference? It's just the psychology aspect of the 10 years at 2%. I don't think the market's going to like that. So I think what happens from here may tell us which way we break out of the triangles. Can we move back to the downside here? We're a bit overbought. So maybe we get a little bit of a rest here on rates moving higher, but just when we get a 2% print, that 2 handle as they call it, we'll see how the market, I could be totally wrong. Maybe the market just says, we don't care. I don't think that's the case, but that's just my opinion. We'll see. Vinny Barbarino, thanks, Vince. That's what it was. Would have driven me crazy. I'd have had to Google that later on. Amazon. And you take a look at Amazon, and man, they shocked everybody with their earnings report. Nobody thought their earnings report was going to be as good as it was. And you can see the move to the upside. So a really nice move higher here from this support area, right around 2,800. We had talked about that quite a few times. And so it held, and we moved back up, and now we're back above 3,000. And so we'll see what happens. Now, the negative, you look at it and say, well, we're in a wave 5 impulse pattern to the downside still. And now we're right at a 61.8% wave 4. That's all very valid. So is that it? Are we going to move lower? The only way I see Amazon fulfilling that wave 5 to the downside is a significant breakout of the triangles, of all those triangles in the markets that I showed you, likely triggered by a Russian invasion of Ukraine. That could certainly be the trigger for downside breakout. And then that whole scenario of the forced selling comes in that we've talked about, where institutions sell the higher dollar stocks because they don't have to sell as much of it. So they sell the higher dollar stocks because they can raise more cash, and they have to have a certain amount of cash on hand. So the selling begets selling, and it feeds off of itself. Other than that, I think there's a chance that we could disqualify this 5-wave impulse pattern to the downside, but it's got some work to do, because we're now at this 3,300 level. It's a major point of resistance all the way really between 32 and 33. So we're right there, and we're at a 61.8% fib level. So that was the easy move that Amazon had. The hard part is going to be, can it get above 3,300? If it does, then it disqualifies the downward wave 5 impulse pattern, and probably means that we're getting upside breakouts of those triangles. Should we place a trade on Facebook? The only thing I would do on Facebook is kind of a PayPal thing, looking for entries for butterflies. When stocks get smacked that hard, they tend to just, if both of those showed up on our AI search, they just didn't have a high enough rating to put on our time strategy trades. But you can still look at wider butterflies for both of those. Those would be something that I would consider. GS, Goldman Sachs. Comment is that there's a gap to fill. Let's take a look. Yes, still got a little bit more to the upside to go. There's 2 gaps there. We haven't quite filled the first one there at 380, and then we break that. We got another one at 390. So we'll see what happens at 390 there. But I agree with you. I don't see anything stopping it. I think it goes up and fills those gaps. I'm right with you. KO. This is another area like James Smuckers. This is a place you want to be when the market changes, when easy money goes away, technology struggles, you move towards these consumer staples, the stuff that people are going to buy no matter what, Coca-Cola being one of them. You're right, it broke the new highs today. I'm with you. I think the wave 5 gets hit at 64. I see nothing to slow down Coca-Cola from moving up and hitting that. And then at that point in time, maybe we take another look. But even though the ADX has come down a bit, still have good separation between the 2 directional indicators. Yeah, I think 64 is in the cards there. SLV, let's take a look. We just looked at the big chart of GLD. So you would imagine SLV is going to be similar, maybe not quite as nice of a triangle. With still a little bit of one. And you look at this and you're like, all right, well, which triangle is it? Well, if it's going to be a descending triangle, we probably need to come down a little lower and try to test this area at 20.5 again. But it doesn't have to. And if it's going to be a symmetrical triangle, it's a really small one. And I don't tend to like that pattern as much. So I'm not really in the symmetrical triangle camp, even though it is a little one. It's more of look at all that support at 20.5. So we're likely going to come down and test that one more time. And then we'll see where the breakout occurs from there. But 20.5 is really key there. We didn't quite make it all the way back up to the previous 4 with this wave 5 ending, but we got awfully close. So does that mean we get an upside breakout of this triangle and that takes us all the way there? It got awfully close, but when I talk about these Elliott Wave Fibonacci levels, usually they get touched. Usually it's not we get close or in the neighborhood. Usually they actually get touched. James asking, any comment on the Google 20-for-1 split? Well, I think that's going to end the fun times with Google. There was the gap up, and gaps get filled, right? I mean, how many times do we talk about this? Those of you that watch this, watch these recordings over the years, you hear me say it over and over and over again, gaps get filled. That's why we talk about them. So you have Google come out with great earnings. They announce a 20-for-1 split. The stock explodes to the upside. What happens? It comes right down and fills the gap. Did anything change from what caused the gap up? Nothing, but it just came down and filled the gap. Now we see if it can move back to the upside from here. And I think Google could be, barring a big downside breakout in the market, because they're in the same boat as Amazon as far as, good earnings report, but they're a high dollar stock and it's easy for institutions to raise cash by selling those shares. Not that they want to, but it's just the easy move. So we'll see how that plays out. But barring something negative happening to the market, I think Alphabet probably is a pretty good buy from here into the split. But once you split 20-for-1, that's going to it's going to, create such an increase in the float that it's going to be harder for the stock to move. So the way it moves, it can still move, but it's not going to move with the volatility that it has before. just because you're increasing the float, diluting it so much, diluting the float. It won't be as big of a move, but up until the split date, I think after filling this gap right now, it could be a really good bullish trade into the split date. That's what I see. Pete wants to look at PayPal. Well, really, there's not much to look at there. We moved down, and we're just going to kind of go in this sideways area. I think 120 is probably where it finds space. We've been waiting to let it end this little downward move to figure out where it wants to find a base. And I think setting up a butterfly around 120 makes a lot of sense. Perhaps a big butterfly like an 80, 120, 160, something like that. Maybe not, doesn't have to be quite that wide even, but I think in this 120 area is where PayPal is going to find its footing. It's just dealing with getting rid of eBay. The transition away from eBay is causing it problems, but the numbers weren't bad at all. So I don't think we go much lower than here. I think that's probably it. So a butterfly around there would be great. Citigroup, Ram, I think that you're going to see that this is probably right in there with all the rest of the financials. Is a pretty good looking move here to the upside. So we're right here at the area of resistance at 67 and pretty good ascending triangle here. Now this is one where you look at this and awfully close to disqualifying that wave 4. Didn't quite get there yet. We have a doji today. So do we bounce back to the downside a little bit tomorrow? We've got a positive 1030 cross. It wouldn't take much more of a movement to the upside to disqualify this downward 5-wave impulse pattern. And then you're looking at stock moving higher from here. Citigroup, fundamentally they're good as well. I think there's a better chance of this 5-wave impulse pattern being disqualified and we move higher rather than the opposite. But we have an ascending triangle. You know what triangles mean. Respect the triangle. We'll see what happens from there. All right, comment back to SLV on the weekly chart. I think we looked at that before. Some of you guys are really into the weekly chart on SLV. And so we take a look here and you can see that we have those same lows right in here, and perhaps maybe a little, maybe what the comment was, a little better formed descending triangle on the weekly chart of SLV. And I would agree with you. So I see what you were talking about, where I said that we probably need to come down a little bit on the daily to really form the descending triangle. It's more well formed on the weekly chart. And remember, that's, if you're going to put a triangle on that, you got to go way out in time and almost be like a leap type of a trade. So I prefer to let the daily chart, maybe we come back a day or two here. That would be great on the SLV. Maybe it doesn't do that, but we'll see how that plays out. But it's good to be back. It's good to make it through the entire hour. Thanks for joining us. As I say, on the sign off every time. And I do very much appreciate, lots of comments came in on getting well soon, and it means a lot to me. I appreciate it very much. We appreciate your time and how valuable that is, most valuable asset we all have. And I've really learned that over the past couple of weeks. And we appreciate you spending some of your valuable time with us. We do our best to make that as informative and educational as possible. Thanks, everybody. Have a great week. Look